if something blows up in crypto, it doesn't end crypto. The promise of crypto remains, but we really need it to get that bottoming process started. We're not there yet. We're in the slow grind down. Every day down another 2.5%. It's very painful to watch. There's lots of precedents for this in history. To get a bottoming in an asset class, you need a major player to basically be offside. In the case of Celsius, it is going to go to zero. It's over levered. It's gated now. And the trouble with gating, a good example would be a hedge fund. Every single customer wants to be liquid the minute you open the gate. And so it's a self-realizing outcome. It will go to zero. It'll have no assets. But that's important. It's not enough. It's not big enough. I'm looking for something bigger. Somebody out there is in trouble. We don't know who they are yet. We'll find out soon. It'll probably happen in the next 30 days. Some giant player is going to zero because this is the first time applying leverage to an asset class that most people assumed wouldn't be this volatile, but has proven to be volatile yet again. And I say all this, and it's important that this happens. It's bad for the individual investors, but in the context of making this market more educated, more institutional, more stable, with better price discovery and less leverage, you need these players to go to zero. So Celsius, thank you for your sacrifice. They'll go to zero, but they're not big enough. They're a small bit player doing something really bad, using leverage to offer 15 to 18% staking, which of course is going to go to zero. But that's okay, because now other investors, after watching what Celsius did or what Luna did, will not favor those structures. They will not put new capital to work there. Market's very smart that way. So by creating these events, taking these to zero, that gives you the, this
Terra
is
Luna is like 60 billion, including UST Terra Luna. They was 60 billion, and now they're
I know
zero.
that
That's
sounds
a big player.
I know that sounds like a lot, but in the context of financial services, that is nothing. Even the entire, under $1 trillion crypto market is nothing. We need, it's really small in the context of where it could go. And so what we need to have happen, and the interest is, I was just, before I came on with you, I was just talking to institutional investors in the Middle East. There is so much interest in getting into crypto right now, and they can't do it because they have no policy and they're not compliant because they're sovereign wealth funds, and they don't have the option. They have no infrastructure for compliance to buy Bitcoin. And so they're really interested in, putting 1 to 3% into Bitcoin, which is the granddaddy asset, given that it's had such a price correction. They're very interested. And, what does that mean in terms of demand? Well, if you're running a $900 billion sovereign wealth fund, that's a lot of demand. And so we don't have that in the market yet because we don't have policy. So when anybody says to me, oh, we want to remain unregulated, they don't get the joke. We're going to stay small and tiny and fractional. Under $1 trillion of assets is nothing. It's nothing. It could be multiples of that if we could finally get some policy.
$1 trillion, but you're saying it's $1 trillion now, and that's nothing, but it might be even more closer to nothing. Assuming that there is this kind of blow up that you're predicting, should that blow up happen, where would you see the price of Bitcoin then? I mean, when would be, what do you think is structurally where things would be once this supernova event occurs?
Well, we need two things. We need that capitulation event. And I'm sure we're going to get it, and that's a very good thing, and I've given you the reasons why. It'll be chaos in the streets kind of thing. Bitcoin will probably drop down significantly. I don't know, maybe another 20% down. Who knows? It's impossible to know. But again, it's a good thing. It's the beginning of a bottoming process. Then we need one of these bills that's floating around Congress right now, and I would suggest the one that I'm most interested in is the simplest to pass. That's going to be the Haggerty or Toomey bill that contemplates auditing stable coins, which is a really easy thing to do, and would make it much, and if we just could get some policy on one thing and it was stable coins, that would really be good, because you would start to know with certainty that you get some movement from the institutional client to allocate. And I'll give you an example. You mentioned WonderFi earlier. Yesterday, WonderFi announced, it's all over the papers up in Canada, that the TSX, the premier exchange there, invited them to list on the TSX. The first time in history a crypto exchange with a dealer broker attached to it has ever been invited onto an institutional exchange. And the reason they did that is there's so much institutional demand in Canada for product. There's a huge amount of demand, and the regulator in the Canadian market is a little bit more advanced than what we have stateside. The UAE is very advanced as well, Switzerland, England. These are other countries, Australia, where you're a little more advanced on policy, and these large institutional equity exchanges are asking to list the shares of these dealer broker crypto exchanges. So I consider that all positive, all positive. But I think right now we haven't found a bottom yet for crypto. Every time there is a washout, it's leverage. And I don't know, and more, it's very opaque right now in some of these situations and these projects, how much leverage is involved. We know now that algorithmic stablecoins will fall out of favor. When you take Luna to basically a zero, people lose a lot of money, and they don't want to do that again. And that's a good thing. That it's an educational process. That's okay. We don't know yet if today you forced an audit on every single stablecoin the way it's suggested in the proposed bills, which is simply an audit every 30 days, and no asset with a duration more than 12 months, so T-bills, for example, average duration 7 months in the portfolio. We know that a stablecoin like USDC has not broken a buck in the last 10 weeks. I mean, the company has basically said, look, there is no regulation yet, but we're going to really hold true to our mandate, which is backed by the US dollar, and it's still $1. And so, and I think the yield on that on 30-day contracts annualized is 4.5% this morning. We use that product corporately, so I'm well aware of what it does every day, and our compliance department looks at it, and the company's been putting out statements every morning saying, you know, we are still a buck and whatever else, because there's so much concern out there about all stable coins. But I'm looking at ones that maybe couldn't survive an audit, and perhaps
say it, Kevin. Are you talking about
Tether? No, it's not right, because I don't know with certainty, but I'm pointing something out. It's not bad if this happens. It's a good thing. That's all I'm trying to say, because it educates the market, gets institutions more interested. Pricing's down so much, there's tremendous institutional interest, but no buying yet. And we've really got to get policy. Great capitulation occurs around events. The long-term capital, the one I keep referencing, was the bottom of the market when that thing blew up. It blew up on leverage, and it was chaotic. I think we'll get a couple of hedge funds. If they're big enough, they'll be considered, you know, catastrophic events, and that's it. The market always goes on. If something blows up in crypto, it doesn't end crypto. The promise of crypto remains, but we really need it to get that bottoming process started. We're not there yet. We're in the slow grind down. Every day down another 2.5%. It's very painful to watch. What you want is you want that toilet to flush. Okay, if we have to go down 25% more, let's do it. And then it's a huge buying opportunity for those that have this stamina to take that kind of volatility. And then you reflect on it 18 months later saying that was the bottom. It's always around an event. That's all I'm saying. I'm just being a student of history. And it's going to happen. You will be reporting on it. You will be reporting on it. You'll remember this conversation. It's coming to a theater near you.